What's up guys, and welcome to another video by Black Swan Financial. And today we're going to be talking about Tesla. On Monday, December 21st, Tesla officially becomes part of the S&P 500. And right off the bat, it's going to be the fifth largest component of the index, right behind Apple, Microsoft, Amazon, and Facebook. You see, the folks over at S&P announced they were going to add Tesla to the index back on November 16th. And since then, the stock has soared over 70%. So if you're interested in learning more about what it means for Tesla stock to get added to the S&P 500 index and why you as a retail investor should even care, stick around to learn more. So starting off at the beginning, what is the S&P 500? The S&P 500 is a composite of 500 of the largest publicly traded companies listed in the US stock market. And basically, by keeping an eye on these larger companies, we can get a general idea on how the stock market in the US is doing overall. Now you may be saying to yourself, okay, but how does this impact Tesla's stock price? Well, in a few ways. Well, for one, there are several mutual funds and exchange traded funds, also known as ETFs, that use the S&P 500 to benchmark their own fund's performance. And while you can't actually go out there and buy shares in the S&P 500, you can buy shares in funds that try to mimic the performance of the S&P 500. For example, Fidelity's 500 Index Fund, Schwab S&P 500, Vanguard 500, State Street S&P 500, and the most liquid of them all, the Spider SPY. So keeping things simple, all of these funds which attempt to mimic the performance of the S&P 500, now they need to go out there and buy shares of Tesla so that their funds continue to track the performance of the S&P 500. Which basically means now there's a rush of institutional money rushing into the Tesla stock. Don't take my word for it. Take a look at what happened on Friday, December 18th, the last trading day before Tesla joins the index. There was over a 5x increase in the number of shares of Tesla traded that day. 218.7 million shares traded on just that one day, to be exact. Which brings us to the second way that the stock will be impacted: increased liquidity. So given the amount of money rushing into Tesla stock since the announcement from institutional investors, average retail investors like you and I, we can expect to see a higher overall number of shares that are traded in the stock going forward, which means increased liquidity. Now, even though there's a ton of money rushing into Tesla stock right now, it doesn't mean that buying the stock is a surefire bet. For one, we're probably going to see traders start to take profit, which means that $200 per share increase that we've seen in the price since the announcement came out, traders are going to sell the shares to lock in that gain, which means the stock price could start to go down. Not indefinitely, but we could see a pullback in the near term. So now you know why Tesla stock just popped and what it means for the company to be added to the S&P 500. And I'm curious, drop us a comment below and let us know if you're going to be one of the many people jumping in and buying shares of Tesla in the near term. Thanks for tuning in, and don't forget to like and subscribe. And until next time, we'll see you down below in the comments.